workshop day. Our next session is going to be led by Dr. Christine Beck. She's a finance professor here at CSUN as well. And she's going to be talking about the importance of credit. And just as a reminder, we do have those evaluation surveys that we are going to be collecting after this session. Thank you.
Good morning, everybody. Is the mic working okay? Can you hear me? Okay. All right. So when I was asked to speak, I talked about credit and credit reports, credit scores, credit cards, car loans. So a little bit of it is an overlap from what you just heard. So I'll just go faster through those parts because it's a lot to cover in less than an hour, right? And feel free to interrupt. The first thing is the difference between the credit score and the credit report, which Shanna addressed slightly. The credit score is the number. The credit report is a much more comprehensive document that has a lot more information in it. So we're going to talk about scores first and then reports, okay? And there was a question earlier whether the credit score and the FICO score is the same thing. There are other credit scores, but just about everyone, when they say credit score, they mean the FICO. So it's possible that there will be a different score, but the FICO is the one that really dominates the market. And as Shanna said, the scores go from 300 to 850. And 850 isn't necessarily a goal. As she also I only have met one person who has an 850. Anyone in here have an 850? He's actually a student here, a finance major, and I think it's crazy. He does, all of his decisions are based on getting and keeping his credit score at 850. So, you know, he doesn't move because that affects your credit score. You know, every decision he makes. So I think he should like calm down and get a life and get an 840. But it's really important to him. So, but anything over, as Janice said, 740 is good. A lot of banks will have 780 as their cutoff. So if you're over 780 or over 800, you're golden. All the institutions will want to work with you. You do not need to have an 850. Okay, so U.S. median is about 720. However, a whole quarter of our population is under 600, so they have a bad score. That's bad. Okay, any questions so far? All right, so why do we need the credit score? Obviously, if you want to get a loan for a car, a house, another credit card, whatever it is, so whether you can get credit, but even more important, it affects how much you pay. So the difference between getting a loan, say for a house, with bad credit and good credit isn't just whether you can get the loan. There's an enormous difference in how much you're going to pay. Think about a 30-year loan with a higher interest rate of even 1 or 2%. You're going to pay twice as much for that house as far as the interest part. So it's huge advantage to have a great credit score when you go to negotiate for loans. That'll help you out a lot. This is becoming more and more controversial, that your future employer or landlord would be able to use your credit information to make a decision about your hire. And there's laws being written both at the federal and state level right now to take off this last one, that employers wouldn't be able to exclude you because of bad credit. If you think about it, if you have bad credit, you need a job to get out of it, but you can't get a job because you have bad credit. You're just like this logical half Nelson. You could never, ever recover from that. But there's arguments on the other side too. You know, this person showed that they have bad habits and they might be more likely to, say, embezzle or something like that. So this last one, we may be having some changes there. Any questions? All right. Okay, so myths. You should close unused credit cards. No, that's not true. Okay, because how much credit you have available is a big part of your score. So if you close that card, let's say you had a credit limit of $2,000 and your balance was $0, that's $2,000 of elbow room you have, right? So if you close that card, it's gone, and it affects your score negatively. It goes down. Okay? Fully merges with your spouses when you marry. Well, it does affect your credit, but not completely. It's not like when you marry, you get the same score. Or for example, I've been married to my husband for almost, let's say 27 years. It just shows you how old I am. And our credit scores aren't the same. And every asset we have, house, cars, you know, all that stuff, we own together. So even after that many years, our credit scores aren't exactly the same. That said, you should really be careful about marrying someone with a bad credit score, right? I'm not here to give marriage advice, but they had habits that got them the bad score, right? And when you get into a marriage contract with them and have assets together, that same behavior is going to continue and affect your score, right? So you might ask them to clean up their score before you go to the aisle. That's all I'm going to say on that one. I'd run away really fast, actually, if someone with a bad credit score. But anyway, another myth is that the scores are based on income. We're going to show exactly what's in there. And that actually, checking your score hurts your score. If you check it yourself, it does not hurt. If you ask, let's say you go into your bank, you got Wells Fargo, and the little customer service people are hovering all the time. Do you want to open another account? Do you want to open this? Do you want to open that? You guys have been in banks, right? The customer service reps are all around you all the time. If they say, all right, you have this checking account, savings account, how about a credit card? If they check your credit, it won't hurt either, because you already have a relationship with them. But if you go down to Macy's and say, they say, do you want a credit card? And you're like, sure, I want the 20% discount. That will hurt your credit if you don't already have a relationship. Okay, so new inquiries and businesses you don't have a relationship, that checking will hurt because it shows the credit score algorithm that you're trying to get more credit. Yes?
What about Credit Karma?
No, they're checking the other public information. So they're reporting information that they're not checking your score. So they have access to the actual algorithm. Okay, so those are the myths, and if there's other ones, just bring them up. Any at this time? No? Okay. All right, so this is exactly how it's calculated. 35% is your payment history. Okay, did you pay on time? Paying your bills on time is absolute. If you can only remember one thing when you walk out of here, pay your bills on time. Okay, that is 35% of your score. Okay, and even how long you've been paying your bills on time is only 15%. You add those two together, how much is that? The first one and the third one? 50% of your credit score, you paid your bills on time for a long time, right? That is it. That's the number one thing you can do to help your credit, is pay your bills on time. Even if you can't pay the whole thing, even if you can just make the minimum, pay it on time. That's the one that hurts. Okay, the second one, we already talked about a little bit, that's how much you have in available credit. So someone we talked about that had a $2,000 credit limit and zero balance would have $2,000 there, right? Someone else that has an $8,000 credit limit but $6,500 on a balance, they're going to be worse. The credit limit's much higher, right? But because they only have $1,500 in elbow room there instead of $2,000, their score's going to be worse there. Does that make sense? So the whole point of having this in there is the credit company wants to know if you do have an emergency, can you address that without having to do other things like not pay your bill, right? So it's all about how much credit you have. And this is the part that gets hurts if you close those unused credit cards. Okay, just another note right here. If you have a credit card that with the zero balance and you never use it, they'll close it for you, right? After a certain time period, the credit card company, because they want to reduce fraud, will just close the account. So then that will hurt your credit score. So if you have a credit card that you don't use but you want it there for this reason or for emergencies or whatever it is, put something small on it, like Netflix. Just 8 or what they're raising it now, right? Is it 9, 10? Does anybody know? They're about to raise their price. 10? Yeah, so $10 a month. We'll keep the credit card active. You're still gonna have a huge elbow room as far as the difference between your credit limit and what your balance. It's not gonna balance because you're gonna pay it off every month, right? Just put it on auto pay, for the credit card too, you're done. You don't have to think about it. Helps your credit, 30% of your credit score, right? And then anytime you get new credit, this is where it hits, this 10% of your score right here. So it's got an algorithm that's looking at all your credit and putting things into these categories. And so once you do get new credit, it can only hurt it this much, but it's still going to hurt it. And then the rest of it, they keep secret because that's their business, right? Everyone in the whole country needs their FICO score, and if they tell everyone their exact formula, anyone could do it, and they won't have to pay them, because all the banks and everyone pays them to calculate the score. We do know, though, in this 10% is a mix of installment and revolving. What's the difference between those? What's an installment loan? Anybody know? The definition of an installment loan? Okay, what's the definition of revolving credit? Those are things that roll over every month. So the credit card would be in the revolving credit, right? So your balance can go up and down. You can either have a balance or not, right? It just keeps going every month. An installment loan is one that you set up at the beginning and you have payments. So what would be an example of that? Your car loan, right? Or your house. Those are both installment loans. So you have both types of loans in here, a credit card and a car loan. That'll help this 10% here. Okay? So remember, the absolute best thing you can do is pay your bills on time. Don't carry balances, or if you do, make sure they're way below your credit limit, and then you just got to put in the time. And that's most of your score right there. Those first three things together, that's 80%, right? That's it. I mean, again, if you don't remember anything else, it's just pay your bills on time. Okay, what's not in your score? And we're still talking about scores, not reports. Yes?
I have a question. Say I recently did a lot of home remodeling, and so I charge credit card high, close to the limit. But then at the end of the month, I just pay it off. Is that going to?
No, it has to be over the 30 days for it to count against you. So if you pay off your bill every month, it won't even show up at all. The only place it'll show up is if, let's say you charge just say $10,000 on your credit card, right? But you're going to pay it off at the end of the month. But that same month, you go and apply for a new loan, say for like a mortgage. It'll still show as a balance. So your lender will say, whoa, you charged $10,000 on your credit card every month. See, I can see it. And you're like, no, I just did it once. I can pay it off. It doesn't matter. It's going to go in their calculations. The banks don't have to do the same calculations as FICO does. Okay?
So when you're about to apply for
A mortgage, don't use your credit cards for 2 months ahead of time. Minimize your credit card use for 2 months. Yeah. There's all these little tricks like this. Okay, so we're still talking about the score and not the report. Look at all these things that don't go in it, even though you're married. Okay? So it's just those things we talked about. You can get arrested, get married to someone with a really bad credit, you can be in some weird religion, and it won't affect your score. It'll affect your report, but not your score. Okay? Any other questions here? Okay, why they go down, you already know the first one, right? Paying things late, boom, immediate hit to that 35%. And the longer you do it, the worse that part will get. Public records, so bankruptcies, judgments against you. So legal things are going to show up here. If you always pay off your balances and all of a sudden you've got credit balances that you're holding for more than a month, that's going to show up too. Okay, that's going to hurt. And opening new accounts, of course. Now, everyone's got to open new accounts once in a while. And your credit score will recover, but it takes a while. For example, I moved here back to California. I grew up here, and then I moved back in 2013. When I left my previous state, I had a credit score of 830. When I went to do something with my credit 6 months later, it was 780. All I did was move. Right? So I opened accounts, I closed accounts, so utilities, and changed my address and things like that. Did I miss any payments? Nope. Did I carry balance on my credit card? Nope. Was everything on time? Yep. Did my credit smash down 50 points? Yes, it did, just from moving. So, but I had to, right? I had to open a new utility. I had to do all those things because I moved. But it's back up now. So any changes in behavior like that will make your credit card go down. The other thing that really hit me after that, after I already covered, is my father has Alzheimer's, so I put myself on his credit card so I could make sure it was getting paid correctly because he wasn't. And then I went to buy a new house, and I was like, what's this card on here? This is awful. And I'm like, oops. It didn't even occur to me. I was like, I'm helping my dad. It didn't occur to me that it was going to hurt my credit. So I got his account cleaned up, don't worry. Anyway, okay, so why things go up? Pay bills on time, obviously. Pay down your balances so you have the nice elbow room there. Other debt is going to be on there. Keep your old accounts open. Remember that 15% payment, how long your payment history is? So those old ones. So if you do want to get rid of a credit card, make it one of the ones you haven't had as long. Not, keep those old ones on there. Avoid opening new accounts, obviously. Don't get distracted when you're shopping and let people, talk you into a whole bunch of store credit, because that's going to hurt too. And then we'll talk about checking your credit report regularly and getting rid of bad things on there. Any questions? Okay, so if we do improve our credit, what's going to happen? It's going to be a lot faster to get approvals when you do need. You're going to get a better mortgage, better terms, much better interest rate. The difference between an interest rate, someone who has 780 credit and someone that has 650 is enormous. Over the life of the loan, it's thousands and thousands of dollars. Easily $50,000 just for a small change. And then, of course, if your prospective employer is checking credit, then it could help you get a job too. So Shannon mentioned this as well. It takes a long time to recover. Okay? Bad things instantaneously affect your credit within a month or 2 months for some of the things. But getting it improved, fixing everything, years. Okay? So it could get a little bit better in 6 months, but it's really going to be 1 to 2 years before you get rid of a mistake. So it's very sticky on the upward direction. Okay, so how do we get credit? Everyone's got a checking and savings account, right? And everyone's going to have their emergency fund after talking to Shanna, right? This is something I did for my kids, the second one. My sons both, the different car loans, and I put, even though I was paying it, I put them as the other borrower. So now they have an installment loan on their credit report, even though they're not contributing at all to that car payment. They do buy their own gas and insurance, though. So being able to get on someone else's loan that's being paid on time will help your credit as well. So remember to keep the installment and revolving things both in there. If you have bad credit and you're trying to get it better, these are the things on the bottom here apply to that. So if you already have good credit, you don't want to go here. But this is like if you need to recover. There's secured credit cards where you put the money on deposit and then you can charge on it. Okay, so but don't do that unless you have really bad credit, because if you have good credit, you can get a much, much better credit card. Okay, so it's kind of like a debit card, but it's credit card, so it goes in that part of the formula and improves your credit. The other thing is, if you can't get a normal credit card, you could get a department store one like Macy's or something like that, or Old Navy or whatever it is, or a gas card, but you do not want to carry a balance on these. Not only are the interest rates higher, they're much less likely to negotiate, like Shanna was saying. They're just like, no, we're not going to negotiate it. And some of them are 20%. And plus, instead of buying a car, a house, the house you're hoping is going to appreciate, the car is going to depreciate, but at least you're going to get a lot of use out of it. It's for things that are going to depreciate before you get home, right? So only do this if there's another good reason, or if you're trying to get your credit up because you can't get a credit card. Okay? Questions? If you always shop at Macy's and they have all those discounts all the time, fine, have a Macy's card. Pay it off every month. I don't care how nice those boots are, you got to pay them off. Okay, questions? All right, so now we're on reports instead of scores. So the score was just one number, now we have a report. And how this is used depends on what you're doing. Are you trying to get a credit card? Are you trying to get a mortgage, car loan? So the lender will decide which information is important to them and what they'll get. If the people that are taking pictures, I can just email this to you if you want.
Okay.
Or they can. So you can see there's a lot more information on here. So number of dependents, how many kids you have, much fuller credit information, anything that's in your public record, divorces, judgments, all that stuff's going to be on there. And anyone, again, looking, even employers are going to show up there, okay? So much, much more information. And again, the banks, let's say you go in to get a car loan and you're looking through the finance company or a bank, they might not necessarily care about most of this. They're going to pick the things that they want. So just because it's all there doesn't mean that they're going to use all of it. But on the other hand, if you're getting something big like a mortgage, they're going to look through every single little detail, right? Okay, so what stays on there? You've heard about people declaring bankruptcy and getting rid of stuff. But the bankruptcy itself stays on for 10 years, and most big credit problems are going to stay on there almost as long. These things never go away. They're always there on your report. Student loans. Do you guys know the difference between secured and an unsecured loan? Okay, secured loan is something that when you got a loan for some asset, and if you don't pay, the bank will take, or whoever you borrowed from is going to take it back. So can you think of examples of a secured loan? Like a car, right? If you don't pay your car, they're going to come take your car. Or your house. Yep, if you don't pay your mortgage, they can take the mortgage. They don't want your car, they don't want your house, they want your payments. So they're not going to do it the first time you miss a payment, but they can. So what are examples of unsecured loans? Student loan, right? They can't take your diploma if you don't pay it. They can't take that knowledge out of your brain. And the credit cards go in there too, as far as unsecured. The credit card company can take your credit card away, but they can't take away the stuff you bought with it, right? So a student loan is unsecured, which is the original justification they had for this. This is Congress that did this, to put this, student loans couldn't be wiped out through bankruptcy. That is also becoming very controversial and may not last much longer. But it depends on whether we can get a new law through, okay? The IRS, though, I wouldn't hold your breath on that one. That's always going to be there. Okay, so student loans, right now, if you don't pay it, it's going to hurt your credit, and it's going to stay on there forever, right? You cannot improve your behavior and get rid of that. It's there. So if you have a student loan, make sure you pay. Any other questions on here? Okay, so Shannon mentioned this also. There's 3 main companies, and they each are required by law to give you a free report for a year. Don't go straight there, though. Go here, and then pick which one you want, okay? Because if you get in there, you're going to get tangled up in their fee services where, oh, we'll look at it for you. Oh, by the way, it's $20 a month or whatever it is, right? Also, this whole area is rampant with fraud and people trying to fish your information, so be very careful. Don't go anywhere else but this site. And then be careful what you click on, because all the ads in the corner really try and look official, right? So go there and then pick one of these 3. And since they have to do it once a year, you could rotate through and check your credit every 4 months for free. Right? And again, it's not your score, it's your report. But there's a heck of a lot of information in there. Yes?
From those 3, is there one specific that you would say would be better to check out first?
The only reason there would be is if you, like, I'm going to go get a new mortgage in 6 months. If you knew which one that lender worked with, then you could concentrate on making that one better. But again, you can only get it free once a year anyway, so it's best just to check all of them, but not all at one time. Space it out a little bit. Put a reminder in your calendar. Oh, time to check your credit again, and do it that way. Okay, so you're going to have to pay for your score. I don't know how much Credit Karma is, but your report is free, but not your score. Okay, correcting errors is important. You got to do it right away. So check your report, go through every single line and say, yep, I did that, no, I didn't. And as soon as you find any errors, fire off letters to both the credit company that you're working on, the report that you're working on, and the person that reported it. So let's say they said you had a late payment that you didn't do, fire it off to whoever said you were late, and the credit company. Get that in your record right away. It's like, I dispute this, and this isn't true, okay? And if you're thinking about buying a house, do this well before, right? You want to get everything cleaned up. They usually only look a couple months back on some things, and then 2 years back on things like your taxes. So as far as your actual pay stubs you have to give them and your credit cards and stuff like that, it's about 2 months. Some lenders ask for 3, but most 2 months. And then more detailed, longer term information, 2 years. So if you're 5 years out from buying a house, you should be checking things regularly, making sure they're all perfect and shiny and before you go in to sit down to get your mortgage. And then, of course, if you go to a whole bunch of lenders that you don't already have a relationship, that's going to hurt your credit. Right? So go to the ones that you know, like let's say you already have a bank account at some bank, say Matador, whatever, the credit union. Go there first and have them check it to make sure it's all fine, because that won't hurt your credit score unless you go to other people that you don't already have a relationship with. Was there a question over there? Yes.
Is it bad to have like a carry-on balance on your credit cards?
It is.
Yeah.
Because what you're doing is you're saying, well, this money's not all that important to me. I'll just give it to the credit card company. So interest rates are outrageous. And think of all the other things you could be doing with that money. Because of the interest rates are big, and you guys talked about how they grow this way, right? It's exponential. It's not like a linear growth, right? They grow like this. I'm assuming you talked about that earlier today. So the longer you keep the balance, the more and more you're paying on it. And in not very much time, it depends on how big the balance it is, you're paying more in interest than the thing you actually bought. That dinner that you went out to dinner, or those boots you bought, they're done, they're gone, and you're still paying for it. And it'd be much better for you to have the money, right? You could buy another pair of boots, or whatever it is. Yes, not carrying a balance is very important. Yes?
I was curious, what about so you just spoke about not having the interest follow you, but what if you do balance transfers to a new credit card with no interest?
I had a slide on that. I took it out because I thought I had too many slides. It can be good, but it's also a good way to get yourself more tangled. The first thing you should do is actually, what Shanna said, is call your credit card company and say, you have to give me a lower interest rate. So try and get it lower on the one you have. If you are transferring, look at the fine print very careful. The fine print is boring. It's hard to read. It's like, but you got to read it, because there's going to be things like in there that say, oh, there's a $50 minimum charge. There's a 3% interest rate, or another $50, depending on which one's bigger. Not smaller, bigger, right? And so there's things in there, and you might say, oh, it's 0% interest rate, but it's only 6 months. Can you do your budget? Can you pay that off in 6 months? If you can't, then it's not a good deal, probably. So it can be a good thing to do, but it's not like, oh, we always transfer our balances. And then think about it too. You're hurting your credit score every time you do that, because you're opening a new account, right? Yes, sir.
In the last session, she gave us the 3 annual credit reports. Is it the same thing?
Yes.
It's the same 3 annual or annual deal?
It's,
Because she said that she gave us 3annualcreditreport.com. Here's the annualcreditreport.com.
yeah, I'd have to double check. There's a lot of scam ones out there, but if Shanna gave it to you, she's competent,
Yes.
very competent. I'm sure that it's the right one. So they might have. There was one that said free credit report, not annual, but just said free credit report, and there was all those commercials. That is a scam. They charge all over. Plus, they get you on all these lists, so you're going to be phished for sure. Don't pay anyone to fix your credit. You can do it yourself. They're nearly all a way to extract fees for themselves. They're not out there to help you. Do not do it. You absolutely can do it yourself. Already, with what we've learned so far, you're good. Pay your bills on time. Okay? If you see me on campus, you're going to think, pay your bills on time. I should just walk around. Everybody pay their bills on time. Okay, so you have good behavior. What else could hurt you? This is another thing that Shannon talked about briefly. Young adults are the biggest target because they don't pay attention to their information as much as people my age do. So and also they're more trusting in general and leave their information around where people get it. The vast majority of identity theft and fraud is someone you know. That's not what you hear on the news. You always hear about your, being scammed by someone in Russia or something like that, but it's actually friendly fraud, what they call it. And again, it's usually aimed towards young people. Okay, So check your accounts. You don't have to, check every single day against your transactions, but, go to your credit card, see what your activity is on a regular basis, and then check your credit score 3 times a year, every 4 months with your free one, and make sure that people aren't using your information. More advice here about avoiding that. Always review your statements. Don't just say, whoosh, I'll do that later. Don't put any extra information ever. Even if you're in a store and someone says, well, they're typing up your transaction, what's your phone number? Like, I'm not giving you my phone number, plus all the people around that can hear it, right? It's just another way. Just say, I prefer not to give it, because they just want it for marketing anyway. Okay? So we already talked about this one. Obviously, you guys know about this, right? You got to protect your computer and your mail. Get junk mail all the time with those credit card applications in it. I'm also really into recycling and reusing and everything. So I tear out the part that has my name on it, shred that, and then I recycle the rest of the paper every day. I go through this, I should get a part-time help for this, because I get so much. And I've called every number to get myself off every list. Doesn't matter. It comes all the time anyway. Okay, so anything that has your name and address on it is potentially a problem. Shred it. Tear it up. We'll do whatever you have to do. Burn it. I guess it's not very environmental to do that. Did I miss anything? Oh, and personal information over the phone. This is usually targeted toward the elderly, but all of us have had this happen, right? If someone tries to talk you into. I always argue with them, get them to hang up on me, and I feel like I did my good deed for the day. Okay. Names that might come up if you're investigating fraud and how to do it. These are the terms that they use. Shoulder surfing is for when you leave your card around and someone looks or takes a picture of your card. So keep your hand over it. Even when you're giving it to the vendor or whatever, keep your thumb over the actual number. And so make sure you protect that as much as you can if you're using an actual card. Shred everything again. Be careful what's going into your trash. And then pay attention to when you swipe your card. Does it look funny? Don't use it. The 2 biggest places where this will happen, where a person will put an extra piece of equipment on top of where you swipe your card, is at an ATM, and also gas stations is the worst. So the people trying to get your credit card information will have an extra piece of equipment, slap it on the gas pump, and so you think, I'm buying gas, swiping my card, I'm going to go home, but your credit card info just got stolen. So just look at it. Does it look weird? Use another pump, right? Or tell the person inside, that would be good. Okay, they're constantly checking, but it happens, with adhesive in the middle of the night, so they have to check every day. That was just 3 slides on identity fraud, but any questions? Okay. All right, now we're officially on credit cards. Any questions before because we've already been talking about them, but now we're going to focus on them more. Advantages, what's the biggest difference between a credit card and debit card?
The money's not there.
Yeah, with the debit card, you can't spend it unless the money's actually there. Yep. Which is not the case with checks, right? You can write a bad check, and the vendor won't know. Not that anyone takes checks anymore, but if they did, you'd be able to overdraft yourself. You cannot do that with a debit card, right? So with credit, you can buy something without actually having the money. There's also a big difference in protection as far as regulations and laws. Okay, so your credit card is protected to some extent. If it gets stolen, you only are owed this much, and there's the steps you can go through to get your money back. Debit cards, though, aren't protected. So if someone steals that and takes your money, it's going to be more difficult. Okay. The reason the biggest disadvantage is behavior. People don't think, because, I didn't have that money, I charged it, they don't think of it as being real, they don't put it in their budget. And then plus, the credit card companies are there to make make money. That's their job. So they're always trying to think of new ways to charge you fees, charge you interest, in order to keep their business profitable. Okay? They're just waiting for you to do something wrong so they can slap you with one of those fees, right? You paid 5 minutes late, wham! You didn't behave properly as far as this rule, slam, they're always going to be there waiting to charge you something else. It's a huge convenience, especially if you're traveling, you don't like to carry cash for some reason, but there's a lot of things that can go wrong. Okay, characteristics. You guys probably know all these. Annual fees. Whether or not you want a card with an annual fee actually depends on the benefits that it might have, whether you carry a balance, interest rate, stuff like that. So you might just say, I'm not paying anything with fee, and that's fine, but look at the other features on the card. And if you're carrying a balance, it might be better to have an annual fee and a lower interest rate than no fee and a higher interest rate. Okay, late charges can be huge. You should see how they're triggered. Dig through those fine print. Make sure you figure out that. Rewards, if you pay your balance off every month, rewards can actually make it worth it to use your credit card for almost everything. But if you're not paying off your credit card every month, I don't know of any cards where the fees and the late charges will be smaller than the rewards you're getting. Okay, so don't carry a balance, and don't choose a card based on its rewards. Choose it based on all this stuff and what you know of your own behavior. Are you someone that's going to carry a balance once in a while? It's probably going to wipe out this, even once in a while. It's going to wipe out this benefit. The charges you're going to get on your behavior are going to be worse than the rewards you would have gotten. Okay, the way the grace period works is that every card has a grace period by law. So if you're paying off your balance every month, even though you may buy something on the 1st and not pay for it till the next month, they can't charge you interest on it unless you charge balance, unless you keep a balance, right? And then they can charge you, the grace period disappears. There's no grace period anymore. So the instant you charge something, there's interest on it. Okay, so as soon as you make that charge, interest starts to accumulate. And if let's say you had a balance, you paid it off, you kept charging little things on it the whole time, and then you paid it off 2 months in a row, it's going to be the second month before all the interest charges are gone because that grace period went away. Does that make sense? Okay, how do we take advantage of the grace period? Well, this is awesome. Do you guys know? Go ahead.
Sorry to interrupt. When is it that the grace period disappears?
Whenever you're carrying a balance. Whenever you get your bill and you pay, say, the minimum payment or less than the full amount, from that time on until everything's paid off plus a month, the grace period's gone. There's going to be interest charges on everything you make. Okay? So the grace period's awesome for people that pay it off every month because it's free money for a month and then you pay your bill. But so as far as that being in the laws, that's cool. But if you're someone that carries a balance, it does you no good. It's only for the people that pay it off every month. Okay, do you guys know what day your credit card cycles? Not when it's due, when it cycles. So when you charge things, when you get your bill, it'll say, April 4th through May 3rd or something like that, right? So May 3rd would be the day that it cycled. You guys know? That's the most important credit card, well, other than when it's due, right? But that's your grace period cut off. So if you charge something on May 2nd, it's in that bill. If you charge something on May 4th, it's not. But you have a whole nother month to pay for it. Does that make sense? So look up when your payment cycle is. In my family, the credit card, it cycles on the 18th. So every time the kids say, oh, I need this, I need that, and it's say the 15th, I say, can you wait 3 more days? And usually by 3 days, they forgot about it, right? So it's like, oh, credit card's 3 more days, can't do it. And so then if they're really smart, they come back at the 20th and say, can I have it now? But so every month I just push everyone a couple days, and I literally get rid of half of it. People say, oh, they forget about it, or they decide they don't need it so much, or whatever. And you can do this to yourself too. If you're out and in shopping, and you're like, oh, I already got a purse, but I really want this one. You just think, when's my credit card cycles in 4 more days? I can wait 4 days for this purse. And usually it goes away, right? That need to buy that purse. You think, oh, I already have one. And so you can affect your own behavior by thinking about these deadlines, okay? So think how much you save getting a whole extra month. You can put that money in your savings account instead, right? Any questions? Yes?
With my cards, it's said 24 days for it to be actually charged on my account, so would that create like another sort of history or?
Yeah, and you can, I actually know off the top of my head which companies I deal with that are really slow to bill and which ones are really fast. Sometimes you'll buy something and by the time you get home it already shows up on your activity, and other companies it'll take days, you know. Yeah. You could buy things, use them up, and finally it'll show up on your credit. Yeah, that's good. Good thing to keep track of. Okay, the average interest rate, I'm not talking about everyone's, but the average is 15. So people with really good credit are going to have low rates, and they don't need them because they pay off their balance every month, and others are much higher. Okay? If you're carrying a small balance, you're probably paying even more because there's a minimum finance charge. Okay, so as far as percentage, it's going to be more. So if you're carrying small balance, just pay it off and pay nothing at all. Okay? The minimum payment has been increased recently because of the 2007 law, but still it's designed to help the company, not you, right? They're trying to stretch it out as long as they can by law, so you will pay them more and more interest. Okay? It's not that, well, you can pay it off if you have this minimum payment. You can't think of it like a car loan or a mortgage. You have to pay more than that. And they're also required by law now to have that little table on your credit card statement that says if you make the minimum payment, it'll take you, 17 years to pay off that lunch that you just had, right? And if you, and then they also are required to say how big your payments would have to be to pay it off in 3 years. Okay. Questions? Anything? All right. Cash advances, much higher interest rate, no grace period. Immediately, you start charging interest. Cash advances are really, really bad. Don't do a cash advance until it's literally life or death, because this will hurt your credit. This will hurt your, almost every category of your credit is going to be hurt by this, right? Except for the paying on time thing. The interest rates are high. They're going to accumulate really fast, and unless it's really a dire emergency and you absolutely have to cash, or one of your family members is going to die, that's the only time you should use a cash advance. I got a little excited there, but these are bad. It's going to take so long to recover from a cash advance as far as your finances. Yes?
Like a while back, I know with the transfer company, Western Union, or if you pay online with your credit card, it's considered a cash advance.
Western Union, yeah, the Western Union is not under the banking rules. They have some interesting regulating rules.
A while back, they ended up charging like 20% on my card.
Yeah, they're really good at extracting fees from people.
Did you just say using the cash advance will hurt your credit?
Yeah, well, because it's going to the grace period's gone, so your balance is going to go up much faster. From immediately as soon as you do it, it'll go up. So that second category, the 30% one, is going to be hurt, right?
Because when I go abroad, I normally use that because I didn't want to carry too much cash with me. So when I get to the other country, then I do the cash advance.
Yeah. Can you use a debit card instead?
I don't have a debit card.
Well, you might want to investigate that. You may not be able to use a U.S. debit card wherever you're traveling, but it's something to check out because.
But I mean, knowing that now, I will never use that anymore. I didn't know that.
Yeah, and the grace period thing is what hurts the second category. Even if you pay it off every month, you've already been charged interest. Let's say at the beginning of your cycle, it could be 3 weeks worth of interest on there, and it's much higher rate than your regular rate too. So you're hurting your vacation or wherever you're traveling. You could be, having more fun with that money.
When I come back at the end of that month, I still pay off everything. Right?
But you still have the interest on there because there's no grace period. Yeah. So what did Shannon talk about so we would never have to do this? We use cash advances. Hopefully people are only using them for emergencies, right? You shouldn't have any other reason. So what can we do to avoid that type of emergency? Have our emergency fund, right? So if we have an emergency fund, we shouldn't ever just pretend cash advances don't exist. Yes?
What if you take a cash advance and you pay it off within 24 hours?
It'll have 24 hours worth of interest.
But I mean, does
No, no. Usually things don't hit the credit card until they've been on there 30 days. So, and then 60 days worse, and 90 days even worse than that. That goes up like that as well. Oh my God, am I out of time? I got too excited, I didn't look at the clock.
You're okay. We're gonna,
Okay.
yeah.
I think I have just a couple more slides here. Okay, we're gonna go really fast now. Average daily balance is how the credit card interest is applied. So if you do say, oh, I got an extra $500 to pay down my credit this month, I'll wait till my payment, just pay right away. Just go on their site and pay it. Because that is, since it's average daily balance, it'll decrease the amount of interest you're paying. So if you already decided to allocate that money towards the credit card, just do it. APR is not a real interest rate. It's the one that the banks got Congress to make law because it looks like you're not paying as much interest. Okay? It's different than the actual interest rate you're paying, and of course it's lower. We already talked about how awesome this is, so I'll skip that. Oh, here's an example of a credit card. 2, X and Y. Y has a fee, but the credit card interest rate for X is 18% and for Y it's 12%. So X has no annual fee, 18%. Y has an annual fee and 12%, and you have a balance of $3,000. Which one do you think is going to be better? Which one's better? Y, and by a lot, right? That 6% difference in interest rate is huge. And this is just rounded off. It's not exact, it's on annualized. So if you actually did the calculations for average daily balance, it would be even worse. Okay. Don't use a credit card unless you can pay off the balance every month. That's the big one. Okay? Impose a credit limit on yourself. When Shanna was talking about balances, that 30%, think about that. I mean, can you really charge this without going over that 30%? That's imposing a tight limit on yourself. We already talked about that. We already talked about that. And this is as far as a behavioral nudge, other than the paying attention to when the credit card cycles. If you are worried about a situation where you're going to spend more than you should, don't take your credit card with you. Just take cash. Especially if you're out drinking with your friends. And if you're already carrying a balance, don't keep charging on that card. Start paying cash for things, because all you're doing is making the interest rate problem worse and worse. Okay, so reduce your spending, obviously. And then also people behaviorally like to pay off the card that has the smallest balance first because they feel like I achieved something. But you're actually going to be better off looking at the interest rates and paying off the one with the highest interest rate first, even if it's bigger, because then you'll be having less in interest rate. This is a good savings tip, and we want to pay the credit card before we start investing in something else, because we need to get that off and have more money for ourselves to invest. Okay? We don't have time for Carlos, sorry. I'm already out of time. So don't carry balance on your credit cards. Pay them off every month. Pay your bills on time. That's all you need to know. Yes?
I have one more question. I read somewhere that if you max a credit card, it affects your credit score.
Yes.
Is that true? Even if you max it and the next month you pay it completely off?
It won't matter. Well, are you saying you carry balance for 1 month and then pay it off the second month?
I mean, like max it, there's no credit left.
Yeah, it's gonna, if you try and use the credit card, if it's maxed out, then it'll get rejected, right? And that shows up in that 10% at the bottom. But where it's really gonna show up is that 30%, the second category. So when you pay it off, it will take that out again. But again, things are slow to change in the upward direction. So it'll show up for a while, even if you max it out 1 month and then pay it off really soon.
Okay, so how long will it show up in your?
We don't know the exact formula because they keep, that's their money markers, so they keep it to themselves. But if you, have 1 bad month, and then it should only be about 6 months that it's really, but it'll come back up. Okay? Any other questions? Okay, I only had a couple slides here on loans. And so this is our summary one. I think I've already talked about all these. This is just emphasizing what Shanna had You got to pay off your credit cards, get an emergency fund should be the first things that you do. Okay? Everybody has financial emergencies. So for some people, it's a parking ticket or losing a contact lens. It'll just throw all their finances off. Other people, it'll be a major car problem or your furnace blowing up or whatever. Some people, it's losing a business. So it could be $50, $5,000. Everybody has financial emergencies. If you don't have savings, they're going to be financial problems for the rest of your life, right? Because you have to use your credit cards or some other way. But if you have emergency savings, you take care of it, and then you start building your emergency savings again. And then emergency was a one-time thing instead of credit problems forever. Okay? Any last questions? All right, thank you very much.